Hey, this is Jeremy from Shine Insurance, and today we're going to talk about auto insurance. I'm just going to break it down for you step by step, talk you through your auto insurance policy. By the end of this video, you'll understand every little part of your auto insurance policy, at least at a basic level. I'm not going to dig into the super deep depths of all that paper that comes with your policy. I'm going to give you an overview so that you understand it really clearly, and we make sure that you have the coverage you need in your auto policy so that you can feel comfortable with that. And our video, this particular video, is for at-fault states, and I'll explain that right now. So there's two different kinds of auto insurance, two different ways that states go about it. And I'm not going to dig into that very much because I've got another video that really digs into at-fault versus no-fault states. So if you want to learn more about that, just click this button right here at the bottom of the screen, and you can go to that real quick 4-minute video or so about at-fault states versus no-fault states. But why that's important to start this video with is this video is about at-fault states. So if you want to learn about no-fault states, if you want a breakdown of no-fault state auto insurance, I've got that for you. It's right here. You just need to hit this button and head over there. But if you live in an at-fault state, your intention is to learn about at-fault auto insurance, you're in the right place. This video is for you. A fun fact, the first auto insurance policy was put into place in 1897, about 120 years ago. And it was with a company that you've probably heard of. Travelers Insurance Company was actually the first insurance company to provide auto insurance. So thought that was kind of interesting, and I'd throw there in the beginning. Real quick suggestions for you before I dig in. You may want to just get your auto policy out right now and follow along as I explain each different coverage. You don't have to do that. This overview works without it, but I feel like if it were me, I would want to have my policy out. So I'd definitely, hit the pause button on this video, go get your policy, make sure you have it right in front of you. So as I talk about each different coverage topic, you can look at yours and see what you have and make sure that you do have it. Okay. Real quick insurance basics. You got to understand these two different kinds of coverage that everything else builds off of. The first one's called property coverage. Property coverage is coverage for your stuff. And a homeowner's policy, that's your belongings, your house, all that kind of thing. And auto policies, that's generally your car and some of the things inside of it. There's another kind of coverage, which in auto scenarios is really almost the most important coverage, and that is liability coverage. Liability coverage is simply protection if bad things happen to other people because of you. There's lots of examples of that, and certainly in car insurance, that's a possibility. And so there's liability coverage, bad things that happen to other people because of you. So all home and auto insurance is based off of those two concepts, property coverage and liability coverage. Let's get started with auto liability coverage because to me, that's the most important kind of coverage that you have on your auto policy. So there are really two different kinds of auto liability coverage. The first one is bodily injury. It is exactly what you would think it is. If you're in an at-fault accident, so the accident is your fault, this covers injuries to the other parties up to your liability limits. So you hit someone else, you rear-ended them or something like that, they were hurt. This coverage on your policy is going to cover their injuries. The next one is property damage. And this is if you're at fault in an accident, this covers damage to the property of others, usually their cars, unless you ran off the road and ran into their house or something like that, up to your liability limits. And this is a good time to really talk about policy limits. If you have your policy in front of you, you probably just saw bodily injury, you probably just saw property damage, and there were numbers next to that, right? It's usually in the hundreds of thousands or something like that, and those are your policy limits. This is the most your insurance company will pay in a claim. So the most money they will pay out, no matter how much the damage is, your insurance company is going to stop paying for that damage when they reach your policy limits. And that's why it's important to decide thoughtfully on good policy limits. Let's look at what those policy limits can look like. So the first way that insurance policies go about it, and the ones that I see the most, is called split limit coverage. And so we're really going to have three numbers. The first one is going to be bodily injury to a single person. So you're at fault in an accident, you rear-ended someone. how much coverage do you have for one person in that car? The second number is going to be bodily injury for the whole accident. So if there are multiple people that were injured, then that would add up to this number, the coverage limit that you had on your policy. And finally, property damage, damage to other people's cars, or a house if you ran off the road into their house, damage to other people's stuff. So here's an example. Some policies would have a bodily injury to one person limit of $100,000, bodily injury for the whole accident of $300,000, and property damage of $100,000. When I offer insurance policies, these numbers are really the lowest coverage I will offer, and lots of people choose this coverage, and that's a fine coverage to start with for sure. So if you've chosen $100,000 of bodily injury coverage for one person, $300,000 for the whole accident, and $100,000 of property damage coverage for the accident, then it could be commonly referred to as 100, 300, 100 coverage. So those three numbers are broken down for you there. And sometimes you'll hear insurance agents or people say these numbers and it doesn't make any sense really. It's like 100, 300, 100. Well, what does that mean? What they're talking about is the coverage limit that you have for those three separate liability coverages. Bodily injury to one person, bodily injury for the whole accident, property damage. Those are your coverage limits, and the insurance company wouldn't pay out more than the limits you've chosen on your policy. There's another way of going about this same liability coverage, and that's called a combined limit. And actually, it's much easier to understand. So we still have bodily injury to one person, bodily injury for the whole accident, property damage. We've still got those pieces in essence, but instead of splitting out the coverage into three separate numbers, so three separate limits that you would have for each of those three things, we simply create one number. And we say, okay, you have a combined limit of $300,000 of coverage. It doesn't matter if it's an injury to one person or it's damage to someone's car or it's injury for the whole accident. It doesn't matter. It's just $300,000 is the most amount of money that your insurance company is going to pay out for liability coverage in an at-fault accident. So bad things that happen to other people in an accident, they're not going to pay more than $300,000. And so that example would be 300. Sometimes they use CSL, the acronym for it. The nice thing about combined single limit is it's simple. It's easy. You know that single number is there. The downside is that it tends to be a little more expensive to go this route. So a lot of times we split it out into split limit, so you get a little bit more coverage for a little bit less money because that coverage is separated out a little bit. So you have split limit coverage, combined limit coverage, one of those two. Your insurance policy is either going to be combined limit or it's going to be a split limit. It's not going to be both. That just doesn't work. It doesn't happen. That's coverage limits. Okay. So is your policy combined or split limit? I think we kind of already said that. You can check it out right now and let me know. And if you want to put in the comments below the video, what your coverage is and even ask us, does this coverage make sense? We're more than happy to reply back to you and tell you what we think. The next kind of coverage you have on your auto policy is uninsured motorist coverage. In the United States, an average of about 16% of drivers are driving without insurance, so no insurance at all. Some of those are doing that on purpose. They know that's happening, but more often it's like a billing issue. So somebody just didn't realize that their policy didn't get paid and then didn't notice when they got cancellation notices and then got in an accident and come to find out they didn't have their policy in place. Unfortunately, that happens all the time. So there are certainly people out on the road driving without insurance. And uninsured motorist coverage becomes your liability policy for injuries to you and your family if the at-fault party doesn't have insurance. So you've got protection in your own policy where it essentially becomes the other person's policy if they don't have one. So it protects you in the same way that their insurance policy should have protected you, but didn't because they didn't have insurance. So that's uninsured motorist coverage. Now, there's also what's called underinsured motorist coverage. Very similar, just a small difference. In most states, minimum liability limits required by law are between $15,000 and $30,000 per injured person. So the required by law liability limits are very low. And if there's a serious accident and you or your family are seriously hurt, it's very possible that someone with minimum limits or very low liability limits could not have enough insurance to cover your injuries. If that's the case, then there's no coverage, for them beyond that. If they've got $15,000 of bodily injury coverage, and you're in the hospital for, something bad, whatever, and it ends up costing $75,000, then there's a $60,000 difference there between the coverage they have and the actual injuries that you incurred. And so your insurance policy actually has a piece of coverage in there for just that situation. So just like uninsured motorist coverage, if the liability limits of the at-fault driver, the other person, are reached in an injury situation, your policy would actually jump in, take over, and pay the rest of the cost of that injury under your underinsured motorist coverage. So you've got uninsured and you've got underinsured motorist coverage, which becomes a liability policy for injuries to you and your family if the at-fault party doesn't have enough insurance. So it's not that they don't have insurance, it's that they didn't carry enough insurance. So that's un and under. Sometimes you hear it referred to that, un and underinsured motorist coverage. And you're like, what? Well, it's actually two different things, uninsured motorist coverage and underinsured motorist coverage. Depending on the situation, both are there to protect you from someone else not having insurance or not having enough insurance. Okay, let's talk about one that doesn't quite fit into either liability or property damage, and that's medical payments coverage. Medical payments coverage on your auto policy is really the only coverage in your policy for injuries to you or your family in an accident that is your fault. So you cause an accident, rear-ended someone, you're hurt, or your family is hurt. This is the coverage in your auto policy that's going to pay out for those particular injuries. And it's usually a pretty low level. I mean, we were just talking about $100,000, $300,000 of coverage for liability. Oftentimes for medical payments, you'll see $1,000, $5,000, $10,000, so much lower. And there's a couple of reasons for that. One is that oftentimes your health insurance will come into play. So there's a relationship between health insurance and auto insurance in an accident when you're at fault. But it's definitely a good idea to keep at least $5,000, $10,000 of coverage in your medical payments line of your auto policy. Let's talk about property coverage. Coverage for your vehicle, your car, in an at-fault accident. In at-fault states, if the other person is at fault, then coverage for your car is going to be on their policy. But if you're at fault, then coverage for your car is going to be under the auto property damage coverages. And so the first coverage, there's two of them. There's two different coverages for two different things. The first one's called collision, and it's the easiest to understand because it's the most common one that happens, and that's coverage for your car in an at-fault accident. So you ran into another car, you slid off the road, hit a tree, whatever it was, the accident was not someone else's fault. Maybe that's a better way to put it, because if it's not someone else's fault in the insurance world, it's your fault. So in an at-fault accident, your collision coverage is going to cover for your vehicle, and it usually has a deductible. Common deductible choices are $500. Sometimes people will have as high as $1,000. Sometimes people will have lower, like $250 or even $100. Obviously, you're paying a different amount for your insurance policy based on those different deductible choices. I tend to advise $500. I think it's a nice middle ground. You're maybe paying a little bit more for your insurance policy than the $1,000 deductible, but you're not paying, for a very, very low deductible. And in an accident, you would have to pay out $500, and then the insurance company would pay the rest. So that's collision coverage. The other one has two names. I think the name that makes the most sense is other than collision, but oftentimes you'll see on your policy the term comprehensive. So other than collision or comprehensive are the same thing. Exact same coverage, just two different names. And this coverage is kind of coverage for the weird stuff. A lot of times when you're watching those commercials during football games, it's like, do you have coverage for this? And so many times the answer is, well, yes, if you have comprehensive or other than collision coverage, then yes, you do. And it's coverage for when a tree limb falls on your car, if squirrels eat the parts out of your engine, or a fire happens in your car, or you hit a deer. That's kind of a weird one. If you hit an animal with your car, that's not a collision, that's comprehensive. So that's one of the kind of weird middle ground ones. But in general, the weird things that happen are covered under other than collision or comprehensive, and that has a deductible as well. It doesn't have to be the same deductible as collision. It can be different, or it can be the same. It's up to you when you purchase your insurance policy. So those are the two coverages for your vehicle in an at-fault accident. There's a couple of extras. The first one is rental coverage, rental car coverage. And it's important to know that this is not, if your car breaks down and you have to have it in the shop for 5 or 6 days, in that case, you would not have coverage under the rental coverage. This is only if you're in a covered loss, a covered accident, and your car has to be in the shop for a period of time, then your insurance company is going to cover the cost up to a certain amount, up to a certain limit of a rental car for that period of time. And then roadside assistance, this is on a more and more auto insurance policies. And there's two different kinds. Is it real roadside assistance or is it reimbursement model roadside assistance? The real version is where you actually call a number that the insurance company provides for you, and then they send out a tow company, and then that tow company bills them. And so you never really have to pay at all. So the tow company shows up and you sign a paper or whatever, and they bill the insurance company. You never have to pay any money. The reimbursement model, which a lot of insurance companies use, if you need a tow, you don't actually call the insurance company. So they don't help you out in the situation. You have to, find a tow company, get them out there, pay them. But then if you send in your receipt, then they'll reimburse you for that. So in my opinion, real is better than reimbursement. And so that might be a question you want to ask your insurance agent or your insurance company. Well, how do you deal with roadside assistance? Okay, a couple more quick extras. Gap coverage, loan lease coverage. If you have a new car or a leased car, you should definitely have gap coverage. This is coverage for the difference between the total payout in an accident and what you owe. So if you purchase a car for $20,000 and you get in an accident 2 weeks later, the value of that vehicle at that point could be $16,000, $17,000. You've got a loan for $20,000 and a payout from your insurance company for $16,000 or $17,000. That means you're left with the bill for a few $1,000s. If you have gap coverage, your insurance company is going to cover that difference. Important note with this one, a lot of times when you purchase cars at dealerships, they'll ask you if you want gap coverage at the dealership. It's usually more expensive at the dealership than it is through your insurance agent, but just make sure you don't purchase it from both, or then you're going to be paying for two versions of gap coverage. Purchase it from one person, either the folks you're buying the vehicle from or your insurance company, and that should take care of it. And then finally, the last one, new car replacement. New car replacement is something that's becoming bigger and bigger, and you see it in commercials, and it can definitely be a great thing. It replaces your car with a model year younger, and essentially what they're saying is they're going to give you a solid amount of money to be able to replace your car with a similar or even a little bit better car, and that's awesome. What you have to watch out for is what they're charging you extra for that coverage. They're not giving it to you for free. They're building that into the cost of your policy, and is it worth it? If you're paying $100 a year for that coverage, is it worth that extra money? So you just watch out for that and figure out how much money it's actually costing you so you can make a smart decision about whether you want new car replacement. Last thing here is a rookie mistake. Rookie mistake is driving like a maniac. If you don't want to pay tons of money for your auto insurance, I would suggest not driving like a maniac. Why? Because tickets, accidents, your age, which I know has nothing to do with driving like a maniac, and credit, which also doesn't, are the biggest players in your auto pricing. So when you get a ticket, it doesn't just cost you that $150 or whatever the ticket is. It's costing you money associated with your insurance policy for the next 3 to 5 years. Accidents tend to be the same way. Age is something you can't do anything about, and credit is something you just need to make sure that you stay on top of and keep good credit to get the best pricing on your auto policy. All right, what did we learn in this video? I ran through it as quickly as I could and as simply as I could, but basically we broke down your auto policy. We talked first about at-fault versus no-fault states, and you figured out which one you were, so you knew you were watching the right video here. We talked about auto liability coverage, which is, bodily injury and property damage coverage for other people when you are at fault in an accident. Uninsured and underinsured motorist coverage, coverage for you if the other person doesn't have any insurance or doesn't have enough insurance. And finally, auto property coverage, collision and other than collision or comprehensive coverage for your vehicle in an at-fault accident. All right. If you want to watch some other Shine videos, we definitely suggest that here's a couple of options. Our new home buyer's guide. If you are considering purchasing a new home, you definitely need to watch this. It's about a 20-minute video. Really lays out from beginning to end the process, all the things you need to think about. There's also a link in there to our new home buyer's guide ebook so that it can walk you through the process if you need that. 5 steps to a homeowner's claim. If you want a real simple breakdown of how homeowners claims work so you know what's happening, whether you're experiencing one right now or you just want to be prepared for one in the future. And then if you just want funny, how not to light a bonfire, someone obviously lighting a bonfire, not making very good decisions about how to do so. You can chuckle a little bit and laugh at that. So 3 videos that we have for you. Okay, and then the last step in every video that we create is first to subscribe to our YouTube channel. We promise to provide videos just like this that explain things as simply and basically as we possibly can so you can understand them moving forward. And then share on your social media networks, wherever it is that you hang out in social media. If you liked this video, you feel like it could help someone else out, just pop it out there, share it with other folks. I would say good information is only great if you share it with others. So please do that right now. All right. Hope you enjoyed this video. Until the next time, this is Jeremy from Shine Insurance. Have a wonderful day.